Every year, millions of Americans write a check to their local government and just accept it. But what if the sharpest investors in the room have quietly figured out how to make that bill almost disappear? We're not talking about tax evasion, offshore accounts, or anything that gets you a Netflix documentary and a prison sentence. We're talking about strategies so legal, so embedded in the tax code, that the government practically wrote the instruction manual itself. Let's start with the elephant in the room. Property taxes in the United States collectively cost homeowners and investors over $600 billion annually. And most people just pay it like a utility bill without ever questioning whether they have to pay all of it. The catalyst here isn't some new loophole, it's that the tax code has always rewarded those who understand it and punished those who don't bother to learn. Think of property tax like a buffet, where everyone pays the same cover charge. But some people figured out they can legally bring a coupon, a discount card, and a loyalty membership all at once. The system is built on assessed values, exemptions, and classifications, three levers that most investors never touch, even though they're sitting right there in plain sight. Here's the first and most overlooked strategy. You can appeal your property's assessed value, and statistically, the majority of properties that are appealed result in a reduction. Most counties assess properties in bulk using mass appraisal models that are, to put it diplomatically, aggressively imprecise. Your neighbor's ugly renovation can literally inflate your tax bill. Now, if you own investment property, the game changes dramatically through cost segregation studies, which allow you to reclassify components of a building, carpeting, lighting, plumbing fixtures into shorter depreciation schedules. This doesn't eliminate property tax directly, but combined with accelerated depreciation, it dramatically reduces the net effective tax burden on your overall real estate position. Agricultural exemptions are where things start to feel almost absurdly generous in states like Texas, Florida, and Georgia. If your land qualifies for agricultural use, your assessed value can drop by up to 90%. We're talking about people running a few beehives or leasing land to a farmer and watching their tax bill fall off a cliff completely legally, because the code literally incentivizes land stewardship over speculation. Homestead exemptions are the quiet workhorse of the personal real estate world, and most people either don't apply or don't apply correctly in Florida alone. The homestead exemption can shield up to $50,000 of assessed value from taxation. Plus, the Save Our Homes cap limits increases to 3% annually, regardless of market conditions. The irony is that people chase complex strategies while leaving thousands on the table in basic exemptions they never filed for. Opportunity zones were designed by Congress to attract investment into economically distressed areas. And while the headlines have faded since their rollout in 2018, the tax mechanics are still quietly powerful for long-term investors. Capital gains deferred into a qualified opportunity fund can reduce your tax exposure significantly. And if you hold for 10 years, appreciation within the fund can be eliminated entirely. That's not a loophole. That's the stated legislative intent. Delaware, statutory trusts, and other pass-through structures allow investors to hold fractional interests in institutional-grade real estate while deferring capital gains through like-kind exchanges under Section 1031 of the tax code. The history of Section 1031 goes back to 1921, which should tell you everything. This isn't a new trick. It's a century-old feature of the system that rewards reinvestment over liquidation. The psychological trap most investors fall into is conflating tax reduction with tax fraud, and that fear keeps them paying full freight on bills they could legally negotiate, appeal, or restructure. Accountants who specialize in real estate will tell you the same thing. The code was written by people who own property, for people who own property, and ambiguity almost always resolves in favor of the informed taxpayer. One common misconception is that only the ultra-wealthy have access to these strategies in reality. A basic homestead exemption appeal costs nothing. An agricultural classification can be pursued on relatively modest acreage, and a 1031 exchange is available to any investor regardless of portfolio size. The wealth gap in real estate taxation isn't about access to secret knowledge, it's about who bothers to ask the right questions. The practical lesson history keeps teaching us is that the investors who build generational wealth aren't necessarily the ones who found the best deals. They're the ones who held positions longer, structured entities smarter, and treated taxes as a variable to be managed rather than a fixed cost to be absorbed. Discipline in tax planning compounds, just like returns do, quietly and relentlessly over decades. At the end of the day, the philosophy here is simple. Every dollar you don't unnecessarily pay to the government is a dollar that stays in your investment ecosystem, compounding forward. You don't have to be aggressive or clever, you just have to be consistent, informed, and willing to ask your CPA whether you've actually optimized your position or just accepted the default. The beautiful irony of property tax strategy is that the government publishes the rules, funds the assessor's offices, and then waits to see who shows up to play the game by the actual rules versus who just pays the sticker price. Rational preparation isn't about betting against the system, it's about understanding that the system was always designed to reward those who engage with it seriously. Whether you're just getting started or you're ready to scale your real estate portfolio the right way, we can help you navigate investing strategies, connect you with contractors for your properties, and point you toward the right lenders. Check out our links in the description below.